This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Professionals.
Welcome back to everyone. Jeff Farnham joins us now with the JTS Mortgage Minute. Jeff, good to see you.
Good to see you, Bill. Yep.
Let's either prove or dispel a rumor.
All right.
I've always heard that it's harder for someone who's self-employed to apply for a mortgage than it is for someone who works for a company. Is there any truth to this?
Well, it's not harder, but it's certainly more complicated to deal with. And the reason for that is, self-employed borrowers have a lot of additional write-offs and deductions and things they can take through their tax returns and their accountants use to their benefit. And it creates sometimes some issues with what we use for qualifying income. A lot of times what we can qualify you off of is different from what the actual tax return shows. So you have to really dig in deep into the tax returns and try to build some income back in some cases. But it's not harder, it's just more complicated in that you're dealing with more facets in that particular borrower's profile.
Is there anything they can do to improve their chances or to help their debt-to-income ratio? Well,
one of the things I would advocate the most for any self-employed borrower is work with a good CPA, somebody that knows the ins and outs of things to help you in structuring. Because a lot of times, a lot of self-employed borrowers we see are sole proprietors or have small corporations, and they don't use a CPA, and they try to do a lot of this themselves, and they end up hurting themselves in some cases when it comes to qualifying for a mortgage, and they don't have all their documentation in order. So working with a CPA to make sure everything's lined out like you're supposed to have is really a good idea.
So would you say it's easier to be approved from a local mortgage company like JTS as opposed to a chain?
Well, we think so, and I mean dealing locally in a mortgage transaction, I don't care how sophisticated a borrower you are or how good a strong of a borrower you are, it's a difficult proposition in and of itself, and there's a lot of steps, a lot of things that have to take place. So a lot of companies now are advocating this push one button and it's all done, and there's just not the case. And there's a lot of steps that you go through. So being able to sit down across the desk and get face to face with somebody is very, very important. So we feel like we do that better than any national chain does. So we think that's a good idea, yes.
Speaking of important, interest rates are pretty important. Are they still trending low?
Yeah, it's really been kind of fun to watch after the Fed made their announcement with the Fed funds rate last week that we actually, the bond market tends to pat itself in anticipation of what's going to happen. So we actually have seen rates kind of soften up a little bit since that announcement, and we've been regaining some of the ground that we had lost leading up to that. So yeah, rates are still holding out in historical territories. We're in the 4s to mid-4s on 30-year fixed rates, depending on the type of loan, whether it's FHA or VA or conventional, whatever it might be. People, they still have the mindset that we're in the 3s, and they think, oh my gosh, rates have gone to 4. Well, that's still a fantastic mortgage rate, historically speaking. Anything under 6 is really, really good. So we're still in those low 4s and in the 3s in the 15-year range. So yeah, rates are still holding out very strong at this point.
Good information as usual. And of course, if you missed last week's show, or if you want to share this one with somebody, you can always go to JTS and Company's Facebook page. And if you want more information, you can give them a call at 329-9090 or pre-qualify, text GTS at 48421. Jeff, good to see you.
Yeah, good to see you, Bill. Thank you.
Take a break. Come back with more in just a moment.